The final New York session of the week is going to be volatile. Traders voice concern about the resilience of the banking sector despite large-scale emergency measures. Wall Street is sensitive to the news on this sector and responds both to positive and negative news. Stock investors still hope that the snags of commercial banks will assure the US Fed to hit the pause button. The benchmark stock indexes closed in the green yesterday after some top US lending institutions gave a helping hand to the ailing First Republic Bank. Stock investors grasped at a glimmer of hope. Thus, the Dow Jones jumped by 371 points or 1.17%. The Nasdaq logged the biggest gain and closed 2.48% up. The S&P 500 added 1.7% to close at 3,960 points. On a Friday, investors abandoned the hope. The stock indexes traded mixed during the European session. They went down in a sink in the New York pre-market. Wall Street indexes shed 0.1 and 0.8% before the opening bell. The S&P 500 is expected to trade in the corridor between 3,860 and 3,990 points. Top American banks injected $30 billion in the struggling First Republic Bank to save the lender, which was affected by the crisis triggered by the collapse of two other average banks, which declared bankruptcy this week. The rescue operation was conducted by top U.S. banks such as the JP Morgan, Citigroup, Bank of America, Wells Fargo, Goldman Sachs, and Morgan Stanley, and managed by Treasury Secretary Janet Yellen, Fed Chairman Jerome Powell, and JP Morgan boss Jamie Dimon. Shares of JP Morgan and Morgan Stanley climbed by 1.95% and 1.89% respectively. The much-needed cash supported the First Republic Bank, whose shares jumped by 9.98%. The positive sentiment spread over the other lenders. Shares of Allianz Bancorporated and PacWest Bancorporated surged by 14.09% and 0.7% respectively after a weak opening. The domestic banking index rose by 3.26%. The banking sector in the S&P 500 grew by 2.16%. The U.S. Treasury Secretary stated that the U.S. banking system remains healthy and Americans can be certain that they deposits would be withdrawn if necessary. Credit Suisse shares listed on U.S. exchanges went up after the bank received a bailout worth $54 billion from the Swiss National Bank to reinforce liquidity and investors' trust. The macroeconomic data was less promising. The weekly initial unemployment claims sank twice last week than expected. It indicates the strength in the labor market that might encourage the central bank to raise interest rates. The rally of high-tech stocks was propped up by shares of social media platforms. Meta and Snapchat shares rose by 3.63% and 7.25% respectively after the US administration threatened to ban TikTok. Today, pessimism resurfaced on Wall Street. The rescue operation has borne its fruit, and traders are now focused on further steps to settle the crisis. The stock market was hit by sell-offs in the early trading hours. Banks again arose concern. Shares of the First Republic Bank shed another 13%, having lost more than 70% in 10 days. The First Republic Bank halted paying dividends and unveiled its current state of affairs. The bank borrowed from $20 to $109 billion from the Federal Reserve in the period from March 10 until 15. Though new deposits sought into the ailing bank, they are provided at current market rates that will raise net income from the interest rates. With such weak profits, the bank will have to sell business. Other average US banks such as the Western Alliance and PacWest dropped by 2% and 5% respectively. Credit Suisse shares again resumed a decline on Friday. They fell by 3% despite the fact that shares of other European banks rebounded by almost 1%. As of Wednesday, the struggling banks obtained the record $152.9 billion under the Fed lending package. Besides, they borrowed $11.9 billion as loans under the Fed's newly established emergency bank credits, and the overall amount of loans provided beat the previous record of $112 billion during the banking crisis of 2008. Last autumn, the Bank of England intervened in the bond market. Likewise, the similar move in the USD rails, the Fed's monetary tightening, aimed to scale down its balance sheet. Now, investors are anticipating the Fed's decision on interest rates, which will be made next week. Following the ECB, market participants foresee a 86% chance of a rate hike by 25 basis points on March 22. Though they admit it could be the final one in this cycle. Despite a roller coaster, the Nasdaq is on track to close with the biggest weekly gain since November, because falling yields of US Treasuries supported some high-tech and promising stocks. Importantly, yields of the two-year benchmark treasuries are now at 4.12%. FedEx shares surged by 11.6% in the pre-market after the delivery giant upgraded its revenue forecast for this year amid spending cuts. As for the economic calendar, the US industrial production slowed down considerably, worse than expected. The Consumer Sentiment Index by the University of Michigan is due later today. At present, Wall Street is more sensitive to the news on the banking sector. And the currency market is calming down. The currency pairs are trading quietly following yesterday's trends. The US dollar index dipped by 0.2% and settled at about 104.20. The intraday corridor for the index is determined between 103.70 and 104.5 points. The US dollar fell on a Friday after the government and top banks lent a helping hand to the struggling bank, aiming to mitigate the strain on the financial system. Investors regained confidence in the light of the support measures and statements by the ECB about safety of the Eurozone's banking system. So, investors decided to sell the US dollar as a safe haven asset. Now, market participants are sitting on the sidelines of the Fed's policy meeting. Until then, the US dollar will remain under pressure. A rate hike by 50 basis points, which was a reality a week ago, is now out of the question. The US dollar's rally is possible in a case of a surprise from the US Fed or in a case of another crash of a bank. Under such conditions, the safe haven US dollar will win favor with the traders. The Canadian dollar is also losing ground despite the weakness in its American rival. The USD CAD pair slipped by 0.23% intraday to trade at 1.3720. The intraday corridor for the instrument is seen between 1.3690 and 1.3790. The loonie survived bearish cycles in the oil market. Today, some data confirmed that the Bank of Canada's monetary tightening had made progress. Thus, the regulator may hold a pause in the cycle of rate hikes. House prices in Canada declined by 0.3% in February from January. The house price index, commodity price index, and foreign investments also contracted. Oil prices rebounded in the early morning but went down in the early North American session. Brent futures dropped by 1.6% to $73.50 a barrel. WTI slipped by 1.7% to trade at $67.12. Both benchmark rates hit the lowest level in more than a year, being on track to the sharpest weekly fall since December. They are likely to close the week 9% down. The crypto market took a breather yesterday and is extending its rally today. Bitcoin tried to rise to $27,000 intraday, but failed. Still, the token has logged impressive gains and settled at around $26,600. Ethereum eventually could surpass resistance and stabilized at about $1,750. Bitcoin's rapid rally alongside other cryptocurrencies expanded the overall market capitalization of the crypto market to more than $1 trillion. At the same time, some analysts are skeptical about the ongoing rally and warn of a trap for the bulls. Indeed, trading volume remains low. The recent crash of Silicon Valley Bank and Silvergate aroused worries about liquidity in the stock market, which assured investors to shift focus towards crypto assets. Downloads of crypto apps increased by 15% after the collapse of large banks and sell-offs of their shares. Investors want to diversify their portfolios and reduce risks which benefit cryptocurrencies. The trend is clear. Investors prefer alternative assets to conventional ones at the time of uncertainty and turbulence. Besides, investors still cherish their hope for a pause in the Fed's rate hikes. The intraday outlook for Bitcoin is upbeat. If the price settles above 27,200, it will climb to 28,000. Otherwise, the price could get stuck in the range between 24,800 and $26,500. Trade with the profits and manage your risks. And see you next week.